Now, also this week, I caught up with Rob Scott, the Chief Executive of Australia's biggest retailer and also biggest non-supermarket retailer, Wesfarmers. Of course, it owns Officeworks, Kmart, Bunnings, so many more. It's got a dominant share of hardware sales, of non-grocery merchandise and of stationery. For 2 generations, Wesfarmers has been driven by shareholder returns alone, which 10 years ago meant jettisoning Coles supermarkets. The move worked and the return on its shareholders' capital rocketed. The big question now, with the dominant market share, is whether that growth can continue.
It's been a continuation of the trends we've seen for the last 6 months or more, and that is that some lower income households, those that have mortgages, they are still doing it tough. There are many businesses, small, medium-sized businesses, that are also facing financing issues, cost of living challenges. But the latest interest rate cut will certainly help. And if there were subsequent rate cuts in the remainder of the year, that will make a big difference. So a little bit tough at the moment, but I think there is reason to think that things could get better in the future.
So do you think the Labor government was right to focus on that cost of living, to provide the support from future taxpayers' monies, because they had to borrow it, and really give that support to consumers during the election campaign?
Well, I think there are 2 important things. Obviously, we need to recognise the cost of living challenges, and certainly in our businesses, that's why we're trying to keep our prices as low as possible. But we also need to remember that the things that are going to actually create sustainable wage growth in the future and are going to help the prosperity of our nation, are going to be the things that are going to improve productivity. So we need to encourage businesses to invest. We need to, that is what is going to create the value that we'll all benefit from.
OK, so let's go to that investment angle, because right now the Treasurer says he wants more Australian companies to invest more here. But when I talk to chief executives of very significant Australian companies, they say they're investing all their capital in the United States because they get a bigger bang for their buck. So what about Wesfarmers? Where are you investing right now?
Well, Ross, we are very linked and exposed to Australia, and we are excited about being exposed to Australia. But you're right, we have to work really, really hard to control the things that we can control to create value. So what does that mean? It means engaging with our teams to encourage the ongoing continuous improvement, changes in ways of working. And I think our team understand that when we do that, we build more competitive businesses and they benefit. We're really leveraging technology and investing more in technology. So that is driving improvement and really making more out of the portfolio that we have. We are investing a lot in Western Australia, and we do have a supportive government framework in Western Australia that is encouraging investment. It is hard to get new projects up and running in Australia.
But that's largely through your lithium and your fertiliser businesses, isn't it?
Yeah, that's right. It's through lithium and through our chemicals businesses, sodium cyanide, ammonium nitrate. So we do see selected opportunities. But look, we are also, to your point, looking at opportunities offshore. We're really excited about the opportunities to develop our Anco Global business, which is leveraging the Kmart unique product development opportunities. We have stores in the Philippines, we have partnerships with companies in Europe, the US, Canada, and that is a good opportunity for growth for the future.
I want to go to that area of where business invests in the future, because I wonder whether there's a danger that Australia's losing competitiveness on energy, on wages, on taxes, because really companies have got a choice as to where they invest. And surely that has to be a priority for government right now.
Well, Ross, I think they are all areas that we need to address, and we need to be mindful that Australia does operate in a global environment. We are a very trade-exposed nation, and what is going to help the prosperity of Australia, higher wages, more prosperity per person, is businesses investing. And you do point out some points that there are a lot of disincentives to invest in Australia. So I was heartened by the Treasurer's comments that this term the government is going to face into productivity. And productivity, as we all know, is supported by investment. It's investment that fuels productivity. So I think there is an opportunity for us to get things on track there.
The government's got to be strong. It's got to be politically strong to take on some of those challenges, because ultimately they're tough decisions and they can cost some political skin.
Well, I think you're right as well, Ross, that any change is hard politically, and I guess the current federal Labor government has a very strong majority. I think there is almost a once-in-a-generation opportunity for us to drive the type of long-term reform that is going to be in the national interest. And look, perhaps now with what's playing out with the coalition, we may well see a Liberal Party be supportive, show bipartisan support for reforms that are in the national interest, in the same way the Liberal Party did back in the 90s and the 80s, where they got behind some of that critical reform. And I think ultimately that would serve their interests well. So, look, I think there are reasons to be optimistic, and I think this is a moment in time opportunity for Australia.
But on politics, let's go to Donald Trump and tariffs, because through Officeworks, through Kmart, through Bunnings, you are a trade-exposed business. Now, the Australian dollar is lower. That makes it a bit tougher for you bringing goods in from overseas. So, you know, in regards to your business right now, are you exposed to those trade and tariff problems that are going on around the world?
Well, the tariff situation with the US is still very fluid, very uncertain, and it was pleasing to see the very onerous tariffs decrease to China, but they are still, for many products, 30% tariffs. Now, it is possible, if that was to continue, which it is likely to, that some Chinese and Asian manufacturers would be looking for new markets. Now, Australians might benefit from that. So our businesses are very focused on, if there are opportunities to source products more cheaply, then we want to capture that opportunity for the benefit of our customers. But I think, Ross, it's too hard to predict what's going to happen next week, let alone next month. So I think we need to monitor the situation, but I'm very confident that our businesses are well positioned, given their significant supply chains, to capture whatever advantages may be there.
So Wesfarmers has always been noted for its return on the shareholders' equity. So I want to go to that point, because it goes to the whole issue about where you invest your capital. So, you know, say you've got massive scale with Kmart, massive scale with Bunnings, with Officeworks. What I want to know is, where does your growth come in the future? Because going back 10 years ago when you had Coles, it was in the 9s, the return on the shareholders' equity. Today, it's 31%. So how does that keep going?
Well, there are a few areas where we see great opportunities for incremental returns, which will continue to support our return on capital. Firstly, Bunnings and Kmart have a very scalable model. We are demonstrating through expanding our addressable market, moving into new categories. They are quite capital efficient initiatives, which will drive earnings growth and improvements.
So in other words, you don't have to use much of the shareholders' money to actually get the sales and the returns from those areas.
That's absolutely right. And then we have some other exciting opportunities. I talked about Anco International. We're also building out a retail media business, which is leveraging our very unique data and digital platforms. The other thing to remember is that we've invested a few $1 billion in a healthcare division and a lithium business that's yet to really generate earnings, because we're still in the commissioning phase of lithium. So they are both areas that have big addressable markets and exciting growth opportunities for the future.
So of all the chief executives I interview, a couple sort of stand out to me. One is Technology One, which has had record sales and profits for, I think, 16 years. The other one is Xero. Again, huge returns on the shareholders' capital in both cases. So I just wonder whether that's an area that maybe Wesfarmers would look to grow into the future.
Look, maybe there will be, but what I'd say is that if you think about the capabilities we have across Wesfarmers, we have, first of all, one of the best customer data platforms in the country. We have one of the best set of digital platforms engaging with millions and millions of customers every week. And we have one of the largest technology teams of any company in the market. And we are increasingly trying to leverage those technologies to drive incremental growth within our businesses.
So that's artificial intelligence you can use?
It's a combination of things. Like clearly generative AI is a very important part of that, and we already have a number of very live use cases and programs underway that really focus on three things. Number one, how do we use generative AI to improve our customer experience? Number two, how do we do it to help our teams do their job? That drives productivity. And then thirdly, how do we use it to create new revenue streams?
What are you investing in AI at the moment, do you reckon?
Well, we'd be investing tens of millions of dollars, but more importantly, we are building some very strategic partnerships internationally. At the end of the day, we're not the company that's going to be investing in large language models, but we want to be a very fast follower and capturing the best capability and expertise globally. So our CFO and myself are heading overseas shortly, actually, to meet with some of our strategic partners to see if we can access the best-in-class capability, if we can enter into some more strategic partnerships and get them to help us invest in what we see as an exciting growth opportunity.
So can I take it to reputation? It's something you mentioned in your presentations this week. You hold it very dear to your heart, but go to other businesses. The banks really lost much of their corporate reputation during the Royal Commission. Qantas more recently, the supermarkets, of course, right now. So I just want to go to your own business, because you have come in for criticism from the ABC's Four Corners with your Bunnings business, saying that you block out competitors, you're a very aggressive competitor. So where do you sit with that criticism?
Well, look, I actually think Bunnings has a lot to be proud of, but I also acknowledge that as a big business comes a big responsibility. And you know, I'm very close to Bunnings and I see the work that they do every day to deliver great value to customers. We pay our team members more than, well above the award rates. The relationships we have with our thousands of suppliers are very strong and long-standing. Now, occasionally businesses make mistakes, and when they do make a mistake, it's important that they own it and face into it.
So you're acknowledging that case that Bunnings in the past may have made mistakes?
Well, I think there are always mistakes that businesses make, but I'd say in the scheme of things, they're pretty small, isolated instances. And look, I think, Ross, that the Australian public knows that when a Bunnings comes to town, a few things happen. First of all, there's a better choice of products, there's lower prices, their team members get paid more, suppliers do unquestionably well out of it.
And there's pressure on the competition that's already in town.
There is pressure on the competition, but at the end of the day, someone has to be there for the customer, right? Someone has to be there to offer great value to customers. And remembering as well that, I don't apologise for trying to build a successful business in Bunnings. We are fighting tooth and nail against some very big and fierce international competitors in the retail space. And, we would rather that those jobs and those opportunities stay within Bunnings.
And like the supermarkets, do you fear a mandatory code of conduct?
Well, look, we realise that is always a risk if businesses don't do the right thing. We're really pleased recently that Bunnings reached an agreement with GIA, which is the Green Life Association. So Bunnings and GIA reached an agreement around a statement of principles, ways of working that was endorsed by Senator Cadell. So I think that was an area where there was some concern from a small number of growers. We've addressed that in a really constructive way. And I think that's a great example of things that we can do in a proactive way to avoid the more onerous regulation that could otherwise be the case.
Rob Scott, it's always great to chat to you. Many thanks for your time.
Thanks, Ross.